Hey guys, Dave Keller here from Market Misbehavior. Wanted to talk today very briefly about a post-mortem analysis. Post-mortem, if you know your Latin, means after death. And a quick story, when I was in college, I took Latin at 7:30 a.m. after I used to work all night as a security guard at one of the dormitories at Ohio State, which is a horrible job for me because I am not an imposing person. I am tall, but not overwhelming, and I'm pretty laid back. So I was not really prepared to stop anyone from doing much of anything, but it did pay pretty well. And I thought as an idiot college student that I could work all night and then go to class at 7:30 in the morning. So I remember very little Latin, but I do remember post-mortem is after death. I want to share a presentation with you real quick. I spoke earlier today at John Carroll University here in Cleveland, Ohio. And this is one of the things that we talked about. Basically, postmortem is if you ever deal with a technology firm or technology group, they'll also often do a postmortem meeting at the end of a big project as a way to review how things went, to review if things went well, things went poorly, and review how they could do things better. And it's funny, as investors, we actually resist the temptation to do that. We love to put aside bad experiences in the past, our bad trades, our bad investments, and kind of push them off, focus on going forward. But the problem is, as an investor, you're going to be wrong a lot, right? You're going to have a position that's going to go against, the market's going to go against your position. So you have to be prepared to learn from those mistakes. So a couple ideas of how you can do this post-mortem analysis in your own trading. Obviously keep a trading journal, and the first thing you can do is go back in that trading journal regularly. So every quarter, every 6 months, every year at the very least, and review your worst call, your worst trade, your worst position, your worst recommendation, and look at and try and deconstruct it, right? What decision tree, what decision process led you to that point where you made that call? Excuse me. And at what point could you have or should you have gotten out of that wrong call or that wrong position? So it's a way to look back in your journal or in your experiences with a regularity. So once a quarter, twice a year, something like that, and go back and review your worst call, and then take some time to really think about, how could I enhance my toolkit, improve my toolkit, change my toolkit so that I can minimize the chance of that happening again. Now, the other thing you can do is look at a period of time. So, for example, this is the S&P 500 in 2018, and these are the 5 stocks that did the best over that period, and the 5 stocks that did the worst. So, think of your investable universe, whether it's the S&P 500 or a group of ETFs or something like that, and sort them in terms of performance over a certain meaningful period of time. So, 1 year is a great way to do it, or 6 months, or something like that. If this is your universe, this is your benchmark, look at those top 5 names. Did you own those names? Because those gave you your best opportunity to outperform. If you own those, then great. What led you to be in those good places? But chances are you probably did not own a couple of those names. Why not, right? What did you miss? What signals could you have seen that you ignored or that didn't have in your toolkit? The same thing on the bottom. Did you own any of these names that really hurt your performance? And if so, what points could you have gotten out or should you have gotten out and you didn't? So a post-mortem analysis is a very quick way to methodically and systematically look backwards, learn from the past, learn from your mistakes, learn from some of your worst decisions or some of your toughest trades, toughest calls, as a way of trying to review your toolkit. And then if you do that with regularity, you will find that you're exiting the bad stuff or the stuff that's not really helping you. You're enhancing your routine with better techniques, better tools that are going to give you a better market awareness and hopefully minimize the chance of underperformance later. That was it. A quick take on post-mortem analysis. If this sort of thinking about your process and behavioral biases is of interest, I hope you'll check out my blog, marketmisbehavior.com. Thanks so much.